Hey guys, what's up? Alec back with the daily stock market, and look at that. Coinbase down 5.9%, basically 6%. Neo down 5.7%, and many other stocks that were down pretty big on Friday. Now, we did put a video out yesterday, Saturday, and we talked all about Tesla stock. So if you are a Tesla investor, make sure you check out that video because we did a full update. We even talk about a possible new CEO for Tesla, Elon Musk stepping down, and a new CEO stepping up. So you definitely won't want to miss that video. We talk all about it. We even talk about other electric vehicle stocks like Lucid. We talk about a possible bankruptcy with Lucid as well. So pause this video and head over there if you need a Tesla and electric vehicle stock market update. Today, what we're going to be talking about is a general stock market update. We're going to talk about the S&P 500. We're going to talk about some of the stocks in the S&P 500 like Microsoft and Meta. And we might even talk about Amazon or Disney stock as well. So make sure you hit a big thumbs up on this video. Thank you guys for the love and support you have been showing on YouTube and Instagram. And let's dive right into it. Okay, so here we have ticker symbol SPY, one of the biggest investments out of any retail investor's portfolio. S&P 500, it's an ETF that mimics it. And we see it down around 0.8% on Friday. And in the week down 2.8%. All right, in the last 3 months down 4%, and we saw it down as much as 12% on the year at one point. And right now in the last 52 weeks, it's down around 16% currently, sitting under $400 per share. Okay, $400 per share, by the way, is a big resistance point. So we want to break above $400 per share to see the bulls back in control. We have CPI coming out, by the way. That's not the only reason I want to talk about the S&P 500 because it could be very bearish for the CPI that's going to be coming out next week. So the bulls aren't in the clear yet. There's still some room for the bears to come in for CPI. But we also have some new stocks added to the S&P 500. If you didn't know, right now the biggest holdings in the S&P 500 is 6.5% Apple, 5.5% Microsoft, 2.3% Amazon, 1.6% Google, 1.6% Berkshire Hathaway, United Health, Alphabet again, so it's closer to 3% for Google, by the way. 1.5% Tesla, 1.3% Johnson & Johnson, 1.3% ExxonMobil, and that makes up 25% of the fund. As for a quick, very broad general overview of technical analysis, we can see a downward momentum on the S&P 500 in the last 52 weeks. We can see that it's been following these trend line supports and resistance for the last year. So in my opinion, I think it will hit one more new low below $350 per share. So for example, I'll probably set my price targets. Price moves below 300 and we'll say 365 for now. If that price alert goes off, that's when we'll be talking about that stock once again. So hit those post notifications on so you can follow along with our S&P 500 and our price alerts when they go off. So I'm pretty confident that it will hit $365 per share or lower. So check back here, set your own price alerts, and come back to the channel when it does hit $365 per share, because we'll probably even see lower prices than that. S&P 500 going to 355 or lower per share. But all in all, that was a very long-winded way of saying that I think that that's going to be the last leg down of this bear market. And then after that leg down, once we break that 365 to 345 price target, then I think there's a good chance that the light's at the end of the tunnel and the worst is behind us at that point. And that's a good time to start buying stocks again. Tax loss harvesting is going to be over with. People are going to be buying their stocks back. So probably around January, early January, late January is going to be a good time to be buying stocks once again for long term. So make sure you are also in that close friends list, because not only do we do option trading where we make short term gains and short term trading, but we also do swing trading, long term investing, and everything in between. So click up on that success number 6, by the way, if you want to see crazy results that people have had, over 85% gains in a few days. Here we have 319% gains just from a day trade. Here we see good call out, bro. Had to take profits up $200, 156% gains, and the list goes on and on. Now over 2,000 students, but we won't go too deep into that yet. Make sure you stay to the end of the video if you want to hear more about how you can join on my close friends list. So yes, Apple is the biggest holding in the S&P 500, but after that is Microsoft, okay? Microsoft MSFT at $245 per share currently, down 7% in the past 3 months, down 26% in the past year, outpacing the S&P 500, okay, in a negative way on the year, down 26%, and up 190%, outpacing the S&P 500 in a positive way on the last 5 years. We've seen a high at $350 per share. Okay, so they're well off their high. If we scroll down, this is where it's interesting because the PE ratio is only 26 with a dividend yield of 1. Okay, so this is one of the best deals in the stock market, in my personal opinion. Having a market cap under $2 trillion for Microsoft with a PE ratio of 26 and a dividend yield of 1 is very appetizing for me. Also, a 52-week low being $213 per share. So if we scroll up and look at the recent low, we see that it is around that $215 per share mark. I'm going to personally put price moves below and put 225. Now I want to load up under $200 per share for the most in my biggest buys and biggest purchases, but I'm going to start off with a price alert around $225 per share. And once that price alert goes off at 225, I'm not going to enter a full position just yet, but I'll enter about a 25% of a full position at $225 per share. At 215, I'll add another 25%, and then under $200 per share is where the other 50% of my position is going to be added to at that price point. So if I had $100 or $1,000 to put into Microsoft, that's how I would do it. I would put in $25 at $225 per share. I would put in another $25 at $215 per share. And then I would put the other $50, the last $50, I would put that in under $200 per share on Microsoft and hold that for long term. Okay, P/E ratio of 26, dividend yield of 1 is a great deal in my opinion for Microsoft. So Microsoft is a killer deal right now. We also have Meta Platforms at a great deal as well. Now, in the last 3 months, they're down 30%. In the last year, they're down 65%. So this might be an even bigger buying opportunity with a PE ratio of 11. Holy cow, have you ever seen a big tech, high growth stock with a PE ratio of 11? Meta Platforms is super undervalued right now. And I've done a deep dive in the past on them just recently, so we're not going to be doing that today. But just know their income statement and their balance sheet is looking beautiful right now. Their PE ratio is looking really good. All I would want to see is a better price. I do want to see them at $100 per share, so I'm personally going to be putting a price alert. You can see I have one set at $99 per share to be alerted as soon as that happens, because even if Meta Platforms goes briefly under $100 per share, I want to pick up a lot of shares because a swing trade is very possible as well. Even a 15%, 25% swing trade from $99 per share up to $115, $125 per share is definitely very easy. And that's a swing trade that I'll be loading up big time with thousands of dollars if that happens. So keep an eye on Meta Platforms for a swing trade under $100 per share, swing trading above $115 and closer to $125 to take profits. And the last stock that we'll be talking about, ticker symbol GOOGL. Parent company's name is Alphabet Class A or Alphabet Class C, whichever one you want to do. They're both the same exact stock, so don't let that get confused. GOOG and GOOGL ticker symbols are the same thing. One just gives you voting rights and one doesn't have voting rights, which you're never going to use the voting rights anyway, so they're exact same stock. Okay, now in the last 3 months, they're down 16%. The last year, they're down 37%. And in my opinion, this is a buying opportunity with Google stock as well. Now, in my opinion, these are all the best deals in the stock market right now that we went over in this video. This is a gem of a video, so make sure you share it around with all your friends because these are definitely some of the best deals in the stock market. Not financial advice, just my own opinion. So here we have Google stock. If we scroll down, we can see that it's a P/E ratio of 18, implying it's a killer deal right now. Market cap is only 1.2 trillion. That will definitely be above a $2 trillion market cap once again. This is a more of a long-term play. However, if it does get into that $80 range, 85 and below, that could be some swing trade ability for Google. However, if you're trying to set up your long-term portfolio right now, Google should be a cornerstone. They're good for artificial intelligence. They're good for advertising, social media. There's a lot of stuff that Google's doing and a lot of different verticals to its business. And in my opinion, they're going to be around for a super, super long time. So here you can see I have price alert set at $86 per share to be loading up on. My average cost is easily below $100 for Google for long term, but I want to get that average cost closer to $85 per share for long term because I think that's going to be paying off incredibly well over the next few years and even over the next decade. The last time we saw Google around $90 or $85 per share was 2020, 2 years ago. So it's basically like hopping in a time machine and picking up some shares of the best company in the entire world at a discount. Okay, from $86 per share, we did see Google shoot up around 55% to $150 per share. I think for Google to get that high once again, it's going to take some time. It could even take as long as 2 to 3 years to get to those levels once again. But hey, if I can get a 50% gain over the next 2 years, I'll take it, especially because it's not a risky penny stock or anything like that. It's a nice value stock and a growth stock. Google's typically known as a growth stock, but right now it's falling into value stock territory with a P/E ratio of 18. Other stats are looking great on it. Volume is looking great. Market cap is looking great. Their balance sheet's looking great. Their net income, their revenue. Everything about Google, Microsoft, and Meta is looking beautiful right now, and that's why I think those are some of the best stocks in the stock market currently. Thank you guys for all the love and support you've been showing on the video. Share this video with a friend, by the way, and I told you I will tell you how to join the close friends list at the end of the video. So you already clicked on success number 6. You read some great success stories from the close friends list. All you have to do is just message me here on Instagram, the Daily Stock Market, 185,000 followers with over 630 posts now. I'll shoot you over an application so that way I can help you out the best way possible and see what kind of investor you are. Once you fill out the application, I'll shoot you over my website so you can kind of see what everything entails, how much everything costs, and if the program is built for you. By the way, it is built for beginners and even the most beginner traders. And then if you like what you see and if it's inside your budget, then let's go ahead and make some money together in the stock market. Let's make 2023 a great year of stock market success. Thank you guys for all the love and support. I'll see you in the next video. Remember, don't time the market, buy the market. Peace.